Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Tuesday, September 5th, 2017. I hope you all had a fantastic holiday weekend for Labor Day here in the United States. Now back at it. Here's a look at the daily time frame of the ES. Right now, again, we've had a little bit of a push higher. We knew that this little rejection here can oftentimes be the point where the market starts to make its way higher and make that push. And we saw that kind of transpire here late last week as the volumes kind of died down heading into Labor Day weekend. We've gotten a gap down and kind of a fill back to the close. But overall, we continue to remain within this range. This is the ES again. Very clear range. We had a sloping kind of channel like this where the thing is breaking to the upside. You can see the pinching of the bands and they're starting to curl up a little bit. Overall, I've mentioned before that all of this behavior here should ultimately will likely be released to the upside as this thing starts to push higher. We have 25.46 as the next upside target here on a key range basis. So breaking above 24.88 and finding acceptance above that zone would suggest a continuation toward 25.46. So overall, still in the range here, not a whole lot really to do at the moment. Edges, this edge would be a fantastic edge to buy, 2400 to 2405. Through this zone and a defense could be a great spot. So we'll continue to watch it, but right now nothing super actionable, but we're keeping an eye on things. From a short-term perspective, intraday, we have a very clean intraday trading range. All right, here's a look at the intraday time frame. Very clear intraday range. You can see right now 65s here, up to about 71 right there. Very clear rectangle type of trading range. Obviously, the best way, typically speaking, that I like to engage these is by looking for failed new highs, failed new lows. You have a flat VWAP. If price were to come up here into 71, 72 and look to fail, that could be a return back to 65. Below 65 into 64 could be an opportunity to fade back up, and that's just the short-term fade opportunities that we have right now with this current range. Here's a look at CL. We'll bring it up to a higher time frame right now, but overall, crude oil has held above the bottom of the key range here, right around the midpoint of that key range, but really hasn't continued higher. You can see here it's kind of pulled back in this manner. It's still holding above the bottom of the range. A lot of chop happening right here around these pink dotted lines, and that's where VPOC is. So you have this larger trading range with edges at say 54 and 42, but price has spent most of its time right now between 50 and 46 right in this middle chop. At some point here, we're either going to make a move to this outer edge or to this lower edge, and that's going to be the opportunity to fade it back up or fade it back down. So right now in this middle chop makes it very difficult to see which way we're going here. Given the rejection here, the expectation may be ultimately to push higher, reject, and then come back. So again, nothing super actionable at the moment from a higher time frame perspective, but keeping an eye on things at the moment. If we take a look at the intraday time frame here for crude oil, we've had a nice little uptrending move here short term in the 512 tick chart. We've seen a move above the 47.65. This is an important FOMC key level from May 3rd. And you can see here FOMC 503, that's May 3rd. You can see it becoming resistance here. It took it, went bid. You can see the LVN. So right now for crude oil, at least on a short-term basis, if price were to retrade and retest 47.65, this could be an opportunity for bulls to look to defend and retry for highs above 48. So that's a short-term idea to watch for there. We do have an NQ move here. Let's see. If we take a look at the higher time frame, very similar to the ES in the lower, but the higher time frame shows again that price pushed through all-time highs here, above those highs, and hit 6,000 for the first time here. That's something we've been talking about for a while, that we may come up and trade 6,000. Our prior goal was that any test of 57.49 down here could be an opportunity to gun for 6K, but we fell just shy of hitting it here and got a new low. And that got us bullish for a little while. This was also kind of a shakeout low that helped us believe that we could see a little move. So a test at 6,000, a little bit of a pullback right now happening. And again, that's the range, 6K to about 57.50. That's the range at the moment with an upward bias. So upward bias means it's safest to buy pullbacks at support instead of trying to fade resistance, because at some point this will ultimately unravel and unwind to the upside. So right now, keeping an eye on this at the moment, a little bit of a push higher. I would say a pullback kind of on a short-term basis to 59 could be the opportunity for swing bulls to defend. So watching 59s on the swing perspective. Lastly, taking a look here at gold futures. Gold futures has been super strong, has rallied nicely, has pushed through 1330.3. That's the 921 FOMC key level. The last time we tested that level was back on election night and never came back to it since. So it's been 10 months or so, and we finally gotten back to that level, now pushing up and holding just above 1330 right now. That's an important level. The entire day is above it at the moment. We could hold up here for several days, but if we fail to hold 1330, that might spark a move back toward 1250. Right now, the trend is up. Very bullish. We're at an edge right now. But given the bullish trend, it's hard to sell this right now. You got to watch for clear signs of rejection or a failure to maintain acceptance. Right now, still trending up, still watching it. 1330 is going to be an important level to continue to watch. All right, that's it for now. Let's see how this plays out heading into the new week of trading. Good luck and trade well.